Good morning everyone. I'm doing a walk and talk. I apologise for any background noise and I apologise for my voice. I have got a bit of a sore throat. Some of you guys will probably say it makes me sound better, but I'm going to try and push through and tell you stocks I'm buying at the moment. Now we have Oracle. I have been saying for a while that under 150 I'm going to be buying, and it's I do think it's still at this price. Now this is one I've done lots of videos on, and when you have something with a margin like this that is investing in AI and has such a huge order book going forward, I just think this is a company worth picking up. I don't think it deserves to be down here. There are risks obviously, but I do think when it's got such a backlog, and I apologise about that, and you can see Simply Wall Street is over 40% below its price target. I do think you're not going to lose much money if you hold it for long term here. This is one of my long term stocks. Now Microsoft is down there, its 52-week low, and I think we don't really need to bother saying much about Microsoft. It's got such a moat around it. I've done videos on it before, how it decreased its risk to OpenAI from 33% to 25%, and we can see how if you hadn't had any exposure to it in the last year, you could pick it up now for how it was at the beginning of the year. No, it's just crazy that you could pick it up for the same price as it was in 2024, and it's had all that growth since then. I am not loading the boat at the moment. I do want it down a bit lower to be loading the boat on it, but I am buying here. Don't forget to hit the like button, comment in the box below, and subscribe if you haven't already. Don't forget to check out the links where you can pick up a free share worth up to £200 for Trading 212, free trade, and a number of other platforms that I do use, such as Lightyear and Invest Engine. If you want any of my opinions on those platforms, just let me know down below. Now, this is the first space tech fund, and I've been talking to a couple of people about this. Everyone's been going crazy over ICEYE that has just done $150 million funding raise, and this has a large percentage of that in its portfolio. And because of that, it's received a 20% uplift on its net asset value. When it comes to market, ICEYE on the and does as expected, then it will, of course it might not, then it will do the whole cost that you're paying for the fund will end up be worth the market cap. for this fund. It's at a PE of 3.74. Now, of course, price to book 0.77. We're still waiting for a lot of the details to be updated, but I think this is a relatively new position for me, and it's not just the ICEYE under their books as well. There's also the Hawkeye and other funds, but it's one that I think is worth. Palo Alto. Now, I've been asked about Palo Alto because, as you know, I've been buying below 150. It's gone above 150. I've been asked, am I selling? No. Just because it's gone above at 150 doesn't mean I'm selling. It's one that I'm holding for the long term. I do think it is one that should go over 200. And it's one that I do like. It's one of these that's best in class at nothing, but it does well in everything. It accumulates these companies, which it just has of one, and it kind of offers a range of this. I spoke before how during COVID Zoom took off, and then other stocks took off, but then Microsoft, which with their Teams didn't, which was nowhere near as good, they did incredibly well, just because companies and people wanted everything under the same umbrella. So I think this is one to still keep on your radar, and if it dips below 150, I'll be picking it up again and adding them up. This is one where there's negative enterprise value, and it's just a trade for me. I don't have any real skin in the game. I will dump a few quid into it and see how it goes, and then I will be looking at the how it performs for me. But it's trading at a discount to its cash, so I think it's might be worth keeping a few quid there. I'll be doing more research on it in the meanwhile. This is one I haven't pulled the trigger on yet, but I'm looking at if people are going about trading Bitcoin. I traded Bitcoin before the run up, and now I'm not touching it anymore. I've made my money, I've gotten out, but I'm looking at companies like this that I trade with the amount of Bitcoin and crypto they have on hand. They are trading at a discount, where if they sold it, they would have more cash on hand than the market cap of the company. So I will be looking at some of these. You can see here, price to book 0.62, price to sales 0.42. Figma, and I said again, when it came out, I said I wasn't touching it. Well, I took a position and I sold it quickly, and then I said I wouldn't be touching it again. Well, at them levels, it was overvalued in my opinion, and I'm proven right. When it got down to 20, I bought a load. I'm buying more here. You guys know that I have been accumulating a lot of Adobe on the value alone, here and ServiceNow. Well, for those who are saying AI is going to destroy it, which I don't believe it will, well, my opinion is I'll buy Adobe, ServiceNow and Figma. That way I could kind of offset it if AI is going to destroy those two stocks, when you realise that Adobe and ServiceNow are investing in AI anyway, so it shouldn't affect it. Then Figma will bank over it. So at these levels it's going up slightly, but it's still within range for me to be buying it. Berkshire Hathaway, now it's near the lows. Those who are saying market's going to crash and it's going to go to nothing, of course we know that's not true. Well, I just say buy Berkshire Hathaway, don't have any stress. You've got all the money on hand to bank while during a crash. There, you see there, you've got a profit margin of 18%, 33% operating margin. The market cap's under the enterprise value, trailing PE of 17, forward PE of 23. Now, I bought during COVID when it was about 50% less, and just before COVID got really bad, the crash got bad, but I sold most of it when it just skyrocketed, and I'm thinking of adding some more as a bit of insurance. Now, Nvidia, I'm the type who, for those who aren't aware, 75 cents of every dollar they bring in was going to the margin. It is now 65, and it's just a beast. The thing is, they keep bringing out new products, so they're putting more and more into research development, and they're investing more, and there's not much you can say about it. When you think they were just a small company not long ago, until they moved over to this, and I just think that they, when you consider that they're going into Marvel as well, they're dipping their toes into Marvel, for those who don't know, picking up shares. You know, I don't understand why, at the point they are now, why they don't buy up a few of these companies, because they will be losing ground to AMD, market share to AMD, purely on the basis that they have a backlog. So you buy up a couple of these companies that can make their chips for them, and you get these Nvidia chips made for you, or you go the other way around, where you start building more of a moat. But I think they need to start buying up more companies. But then I'm no Jensen Huang. He might want to keep money on hand, he might want to keep putting it into research and development. It's worked so far for him, but we'll see. I still think it's a beast. I still think it's got a long way to go. Amazon, now The Mag 7, this is my favourite. I'll tell you why. Everyone's going on about Meta and their margins and that. A woman has successfully sued Meta for her social media addiction. I suggest you watch Molly vs. Machines. It was found Facebook and Instagram was partially responsible for the death of a girl. I expect more lawsuits to come in, or guidelines, stronger guidelines. If they don't, then I expect more of an uproar. Amazon, no offense, is really low in my opinion, and it's just the beast. It's got so many strings to its bow, and you can see, although the margins aren't showing it, it's because it's investing everywhere. And what I like about it is, although I'm in the UK, in America they were giving free rides on their driverless taxis to get the appropriate license, and the end of the year they're planning to put that stop the free rides and put that on Uber's platform, which means they'll start getting money from that. And I do think there's a huge opportunity here. Sea Limited. Nah, what can I say? This is a growth machine, and if you see it, actually you can actually go back to, I was going to say I bought it during COVID and it just skyrocketed. I sold before it hit 300, but I can't believe I can get it back at the price I bought it at during COVID. Now they are investing in same day deliveries and a number of other aspects to improve their business, which is keeping their margins down, but means they're taking market share. Don't forget, they are following the same blueprint that Amazon followed when they were starting out, and they was at a much higher valuation. With Prime delivery, they started with one day delivery, then same day delivery, and all these other add-ons, and then they took them away. They did in the UK anyway. But I do think that this is one to keep in your portfolio. And another one that I mentioned during COVID, and it was Grab. This is now profitable, and it's funny that when it's profitable it's down at all-time 52-week lows, and I think it's near all-time lows. But WeRide and Grab launched Singapore's first autonomous public ride service in Punggol. Now this is, in my opinion, a good one to pick up, because Amazon tried to take market share from them and failed. So Amazon is still being used over there. People are still using Amazon, and they're trying again. But it's I think once Amazon fail with something like that, they are not going to invest so much in. Please let me know any stocks you're looking at, and I will do a video on them. I'm not adding to any of my major positions which I said that I was loading up, or I was buying up a load of shares on, because I've bought up too many already, and until they drop anymore I won't be buying up anymore. So I am disciplined. I don't just go and buy my whole allocation in one go. I do it in increments. So also, if you remember, we'll be doing a Q&A, so drop down any questions you have that you want in the Q&A, and mark it for Q&A, or mark it if it's just a question you want answered as soon as possible. I'll see you in the next video. So stay safe, stay